Hello everyone, welcome back to our channel and welcome back to this video. In this video, we wanted to share with you how Circle's soaring IPO is signaling a renewed crypto enthusiasm on the Wall Street. Shares of Circle Internet, the operator of USDC stablecoin, surged an astonishing 168% on their New York Stock Exchange debut yesterday, underscoring renewed investor appetite for digital assets and signaling a potential thaw in the US IPO market. Circle, which priced its IPO at $31 a share, raised almost $1.1 billion, valuing the company at nearly $22 billion at the close. Trading was temporarily halted 3 times as shares rocketed to a peak of $103.75 before settling at $83.23. The dramatic debut ranks amongst the largest US IPOs this year, a welcome shift amongst a challenging few months that saw other high-profile listings postponed amidst the tariff-driven policy environment. This surge in Circle shares comes amidst a wave of optimism for the crypto industry, which is fueled by the administration's promises of lighter regulation and efforts to position the US as the crypto capital of the planet. Washington is on the verge of finalizing its first stablecoin regulations, which could expand the global stablecoin market from just $250 billion right now to an estimated $2 trillion in the coming years. Circle's USDC stablecoin, with almost $61 billion in circulation, sits behind the market leader Tether, but it's poised for significant growth. Circle CEO called the IPO a major milestone and highlighted that Circle's status as a US-listed SEC-supervised company is a step forward in gaining broader market acceptance. Analysts believe that this regulatory clarity could pave way for mainstream adoption of stablecoins, particularly as they become a key component of cross-border payments and a store of value in the emerging markets. However, the stablecoins do remain controversial. Chain analysis estimates that 63% of last year's $51 billion in illicit crypto transactions involved stablecoins. And still, Circle's strong financial performance reflects the potential for stablecoins to serve as a bridge between traditional finance and digital assets. Circle's reserves are managed in a BlackRock money market fund benefiting from high US interest rates. Despite paying out 60% of its revenue in fees and transaction costs to partners like Coinbase, Circle believes that its global network, scale, and regulatory license will give it an edge over traditional banks and other payment providers. The company also bounced back from the 2023 collapse of Silicon Valley Bank, wherein it had $3.3 billion in reserves temporarily trapped. And that was thanks to the swift action by the US regulators. Circle's IPO is more than just a win for the investors. It is a signpost for the crypto sector's evolution and a test case of how stablecoins might integrate with broader financial system. As policymakers move closer to establishing regulatory framework for stablecoins, Circle's success story may well shape the next chapter of digital finance. That's all that we wanted to share with you in this particular video. Hope you've enjoyed this video. Do stay tuned in for more.